The US is now approaching a level of debt that we have not seen since World War II. In the fiscal year of 2020, it is said that the United States has printed 22% of dollars that have ever been printed in the US government. What does this mean? And what will this mean for your investments? Okay, first things first, inflation. This is the biggest concern regarding all the stimulus money that is being pumped into the economy, and we have large-scale guru names like Michael Burry, who's warning the general population about the possible effects that might come. But what is inflation and how is it caused? Well, inflation is basically a reduction in buying power. So your, let's say $100 might buy 100 sacks of rice, where if that money is inflated, that $100 might go down, and instead of buying 100 sacks, maybe it'll only buy 90. And if this continues, well, how many dollars will it eventually need to buy that one sack of rice? Because we've seen in other countries that have had hyperinflation where people will pay trillions of dollars to buy a loaf of bread, and the baskets that they are carrying all this money in is worth more than the actual money inside of the basket. It's been so bad that in some cases in history, people used to use the currencies, the dollar bills, as insulation in their housing because it would be more practical than actually buying the insulation. And yes, that means millions upon millions of dollars stuffed inside of your walls just to keep you warm because it's worth nothing. Well, with all this, a lot of people are demanding higher wages, and we've seen this with the minimum wage, and there's been a lot of push towards making that into $15. But where does that money eventually go? Well, I'll let you in on a little secret. Wages are a direct correlation of the value that you produce. So businesses aren't going to hire people for $15 an hour if that employee is only profiting the business for $12 that hour. It just doesn't make any sense. So there's going to be a lot of layoffs. Furthermore on that, if people do start making these higher wages, the prices are just going to reflect that. The businesses don't necessarily want to lay off these employees. However, if they want to cover themselves, if they need to pay $15 an hour, they're either going to have to up their prices or keep their prices the same and cut the employment staff. Inflation is very closely tied with debt, and not only debt, but national debt. We've seen this as governments try to print more money just to pay off this debt, but again, that doesn't really help because the buying power of that dollar that is printed is again devaluing not only that one but all the other dollars that are along with it in the economy. The M1 money supply, which is anything that's highly liquid, has spiked up to historic numbers, and this can be very concerning. It is said that the US dollar devalued by 12%. So for every single dollar that you had, now it's only worth 88 cents, and this is going to continue. Potentially one of the most alarming things about this is that China, another world superpower, is starting to not really depend on the US anymore. For the first time in history, China has not devalued their currency equivalent to the US. And what this means is that they're starting to try to become more independent, and they're depending on their own consumption of their country. What I mean by this is that the Chinese factories are not shipping products over for the US consumption. Rather, they can just sell it to their own middle class, which is slowly emerging, and create a thriving economy there. And as a lot of you guys probably know, that the US dollar is fiat, and it's not on the gold standard. That was dropped in the 1970s by President Nixon, but there was a long history before that. With the gold standard, it backed up the US dollars. If you turn back the clocks to the gold standard times, the US dollar didn't devalue at the consistent rate that we see today. It's almost kind of a given that everyone in this generation just sees 2% inflation as kind of a thing that's unavoidable, and it'll just continue to happen year over year. But there was a time where the US dollar actually appreciated or kept pretty steady, and that was on the gold standard. I'm not really going to dive into that. I want to save that for another video, so keep tuned. If you made it this far in the video, you might as well like it because it really helps out the channel and I really appreciate it. But what can you do about this hyperinflation that might be coming? I'm sure you've heard just buy physical assets, gold, silver, and any commodities. However, is this really the right idea? Well, I'll tell you in my personal opinion, I think it's kind of stupid. Gold is just a shiny rock. It does not have any intrinsic value. It doesn't produce any wealth, and it's just what the next sucker will pay for it. In extreme conditions, when you actually need the money and you're going to look for gold, gold's going to be useless. Look at Katrina. When Hurricane Katrina hit New Orleans, of course they had a small economic meltdown. In Katrina, no one gave a shit about gold or money. All they wanted was water, supplies, gasoline, anything like that. The economy quickly changed to a bartering system, and that's how it would be. Because, come on, who really needs gold-plated teeth when a hurricane hits your home city? The only thing that gives gold any value is that people like it. And you can make the same argument with the paper dollars that we use today. These things are worth about nothing. Currency is just a medium of trade, and it's all based on trust. Meaning, if you sold some kind of value to someone else or provided a service, you got paid that money, let's say $5. And that is based on trust that that $5 will then go to the supermarket and let's say buy 5 loaves of bread or equivalent to the same value of that you produced with the service or whatever you sold. So in the coming years, it is no surprise that we will probably see a good amount of inflation. The US Fed has said that they are going to see more short spikes of inflation throughout the next couple of years rather than a consistent growth of inflation. Now they say that they're going to keep it and hover around 2%, although we'll see what really happens, especially with this new stimulus that was just approved. This is again a great reason why you need to be investing, because if your dollars lose 2% every single year, that means if you're not making more than 2% every year on your invested cash or sitting cash, that means again you were losing that 2% year over year, and eventually your money's just going to be worthless. So take initiative, make sure that you get into the markets, and again, disclosure, this is no financial advice whatsoever. This is just my personal opinion, and invest with your own due diligence. Until next time, I wish you guys the best of luck and good luck in the markets.